Alright, hi everybody. Wanted to do a real quick update. Been getting some private messages and whatnot, so I thought I'd just do another video just to um help everybody and if anyone had the same questions. So a lot of people ask me what's the best strategy? Do I trade every day or what you know what what's the best thing to do? Now, I don't know, for me it all depends on you. You can make really good money not trading every day. It just kind of depends on how you want to do it. But I want to give you the heads up because if you're going to trade, you want to start when IV rank is high. So on the script, everyone should have the script. I put it out there on the forum. If not, email me and I will let you know. I'll figure out. I'll share with you. Make sure you get it. I like this IV rank script because basically it just tells me what IV rank is. It's just for me easier to read. So I like doing it that way. So now let me show you real quick, just to give you a heads up. So IV rank right now, as you can see, is around 37.97. That's if you're going to start trading, you kind of want to start trading or start selling positions once IV rank goes 30 above 35. But I'm not saying load up, meaning you don't want one trade to be no more than, like, let's say 1-2% of your account value, depending on its size. Again, that's all relative there. But the reason why I don't want you to go nuts is something could happen, like here. Well, even here. Okay, so back in February, you see IV rank climb to about 35, right? And easily IV rank can just, jump up to 50 in the next 2 or 3 days, as it did right here. Only took, I'll zoom in real quick. It only took 1-2 days to get to 50 from 35. Okay. Now, as you do that, remember now, when you sell options or you sell puts, sell calls, sell premium in general, you want IV rank to drop. So this has to drop at the same time your direction, what you want to be pretty, well, yeah, actually you can be wrong on direction, but if IV rank collapses, you still make money. That's another good thing about selling versus buying. All right. But what you really want to do is you want to be able to scale in. So let me zoom back to, okay, remember this? This is 2015, August last year. So I'll zoom into right here, right here. Okay, so, and I'll scroll over here. Where did it go? August, 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 August. Sorry, zoomed in too far. Here we go. So, and I want to see IV rank right here. Okay, so here's where I talk about scaling in. So look, on August 19th or so, right, IV rank started to get higher. August 20th, that day, IV rank shot up in one day, pretty much to almost 100. I think this was Brexit, right? I can't remember now. But anyway, it doesn't really matter. So if you start trading and when IV rank is 35 and you go too heavy, when this position goes against you, okay, your losses are going to be too great, and you want to, that's what you want to watch out for. Now direction is okay because it didn't dip that much, but look at the third day, okay? So you probably would have been, it would have worked against you. Now here's why it's great to load up or to be a lot more aggressive, I should say, um, when IV rank is high. So let's say IV rank is 35, you put in 1-2% of your account value. It goes against you. Now it's at 50. You can add another 2%. So you only got, 4% of your account value invested, right? And it shoots up to, well, the very next day, basically, it shot up to 100. So now you want to put, I don't know, another 10%. You got 15% of your account invested. Remember now, you only need to make 1% on 25% of your account to do 66% a year. If you can make 1% per day on 25% of your account, that's 66% return on your accounts. I'm going to share with you this other study that was just done too. Okay, now remember now, if you're selling puts, even if you started down here, you're selling 45 days to expiration, which means your expiration is not this red line, nor is it this red line. You're probably going to move out to even here. But let's say you did it right here at this expiration. Here's the beauty about selling when IV rank is above 50 is what I like to do, okay? So look right here. IV rank is above 50 right here, okay, on the 20th. It went against you on the 24th, right? But it shot up to 100. Let's look at how long IB rank stayed at 100. Sorry, let me scroll over real quick. Again, if this is sounds like repetition, is because it is. A lot of people joined my site at different times, and a lot of people, I always believe repetition is the mother of all learning. So here you go. Okay, I look how long IB rank stayed at 100. 1, 2 days, okay, and then it dropped. So let's say you sold it when IB rank was at 50, which is right around here. Now, if you're selling and you're doing a golden gecko, you're doing it at least one standard deviations out of the money. That means you're betting it'll stay probably like around here above this line. Okay, so 195 or so at that time. Well, look what happened by this expiration date. Okay, sure, it moved against you for 2 days, but you added on more positions, right? So you're still, you're still very much in play. But even if you didn't, look what happened. At the end of expiration, look what happened. IB rank went from where? 100 down to what? Oh, let's look right here. The day before, actually. I don't know, 32. And that's how you're gonna make your money. Now, Karen does not do this. Okay, she does 2 standard deviations away. And she does them almost no matter what IB rank is. Okay, because she's unfortunately for her, she's managing other people's money, so she just can't stay in cash. When you manage your own money, you can do whatever you want. A lot of my private coaching members, they ask me the same question, Mark, I don't want to trade every day. Is there a way I can just manage my own money and still do it without watching a screen every day? Absolutely. That's part of the perks. They'll get alerts on when, they can literally do this in 15 minutes a day. And they only do it when the cards, I should say, when the odds are in their favor, when the stack is stacked on their side. So IB rank is the equalizer and what helps them out. So, but you have to watch out, meaning there are black swan events, okay? But there was just a study done. So let me show you real quick. I've got a few minutes. Let me show you this real quick. Oh, here. Look. This chart, this white line is the SPY since 2005. So if you dumped $1 million in the SPY and just let it sit, okay, this white line is buy and hold is what would have happened. Now, see this blue line right here? This is if you combine the strategies, meaning managing your winners either at 50% of max profit or 21 days to expiration, whichever comes first. Now, and also, by the way, this account value is if you only used 25% of your invested capital. You still did double what the SPY did. That includes the crash of 2008. Okay, so basically, if you just did this, SPY, and here's what they're talking about there. If you just did this, and change this to 45 days like this, here. If you just did this, okay, on the SPY, like right now, look, this is important. Tomorrow is 45 days expiration. So what that chart just showed you, if you just did this right here, okay, and sold it, okay, and when this number gets to 21, right, you take it off. Win or lose, take it off. If this gets to 20, once this trade gets down to 21 days to go, take it off, win or lose, or if you can collect 50% of your max profit. So if you can buy it back for half of this, take it off. Or if this gets to 21 days to expiration, take it off, whichever comes first. Now, as soon as you take it off, you put another one on again. Okay, same criteria. Just doing that doubled the performance of the S&P 500. And by the way, if you only did it using 25% of your capital. So let's say you have $1 million account, right? Nice round number. You put on this trade like this, but you make sure it takes up no more than $250,000 of your capital, right? 25%. So you place it and you take it off just like what I told you earlier. As soon as you take it off, you place another one. If you did that just, I don't know, 12 times, if you did that 12 times a year, basically, right? Since 2005, you would have doubled the S&P 500 with 1/3 the risk. Now, this is not what Karen does, and this is not what I do. What I teach and what I do is a lot more different. And to be honest, the version I do, I kind of avoid the tail risk. I don't like those black swan events. So when I tested it and as I'm doing it, it's done way better. But what I'm saying is anybody can do this. Just follow this simple strategy right here on doing that. Now you can't do this in an IRA. You only can do this in a regular account. The ones I do, you can do. Most of my private coaching members are business owners. They want to pick off, but they have a lot of money in 401ks that they wrote over to IRAs, so they can't do this. So I have to teach them a different way to do it to mitigate the tail risk or those black swan events and still be able to do it in the IRA account. So that's a little bit different. But basically, I wanted to explain you that chart because what the arithmetic shows you that it works. All right. So that's one simple way to do it. And basically, if you go back to 2005, that's just what happens. Now, by the way, that example I showed you did not even include only doing it when IB rank was high. Because if I expand this out, that was just doing it 45 days to expiration, doing it no matter what IB rank was high. That's why you saw these dips, right? Now, if you only do it when IB rank is high, you stack the cards a lot more in your favor. I've got a few minutes left. I don't want this to run in too long. But look at what happens if you just wait for IB rank to get above 50. The odds are a lot more. That's that green line. Okay, the odds are a lot more in your favor. The downside to that, though, guys, is you're gonna have a lot more of your assets in play at any one given time, and you got to be very, very patient, and it's very, very, very boring. But if you're like a lot of my coaching clients, they're not really in it for the thrill. They're in it to manage their own money and make money. And they have other things to do than watch their screen every day. So they rather wait for my alerts, and then I tell them basically what's going on and what to do. And they want to, if they choose to do it, that's up to them. And it's been working very well. So I wanted to give you guys a heads up because if you're going to do this, get ready. Because with the election going on, look at IB rank right now. Nice and high, or higher than it's been. Okay? So you can start dipping your toes in, but like I said, don't go nuts. Because I'm hoping actually that this spikes to about 100. Another thing, look at these, see these bands right here? Those are my two standard deviation Bollinger lines. Look what happens when they get really tight. Okay? I'll just zoom in right here. See what happens when they get really tight like that right here? Usually what happens is it signals a pretty big move. And look at what happens. Okay, it gets tight. See how it bands in again and then explodes? Well, look how it's going now. See how it gets nice and tight and then something happens and look, it's getting nice and tight again. See, nice tighter here? I don't know. Who knows? I'm just saying, be aware because this is where an opportunity is made. You can make a lot of money when everyone else is scared. Okay, so don't forget, if you want to do simple trades like this chart I showed you right here, that study that did over double what the SPY did, just do this. Really simple. Okay, just you can't do it in IRA, but you really got to manage it because if it moves outside, you got to know what to do after. Okay, rolling it and managing it, and just being totally mechanical. But you can do. And by the way, I like using indexes versus individual and avoid earnings because I don't want to worry about those, weird surprises about, that's why I love just doing the ETFs. If you want something cheaper, do this. Do the IWMY. It's half the price. It's cheaper, okay? And it's higher. It's a little bit more volatile because it's smaller, so you can play more. I mean, you have more opportunities to trade. Okay, here's the same chart, and you can see it'll take a lot of it's a little bit more volatile, so you get a lot more chance to play. But you get bigger moves like this, so you got to always be prepared for those black swan events, which is there's a way to do that though, and to protect yourself from that. Let me go back to though. So same thing, IWM, go to strategies. You can do a simple strangle right here, 45 days expiration, and do something like that. Okay, you won't collect as much, but that's because it's a lot cheaper index, right? And this study right here was on the SPY. They didn't test it using the IWM, but it'll still work. Anyway, hope this helps. Any questions, shoot me a holler on the forum or give me an email. All right, have a great one.